Hello and welcome to the weekly roundup for the week ending Friday the 16th of July. Hope that you do enjoy these weekly reports. Please do subscribe to receive regular stock market content, and any questions pop them in the comments box below. Also invite you to follow our free stock market reports on tech, banking, IPOs. Just use the link in the description below. Right, so what a choppy week we've had. It's been very choppy trading across the week. Indices on both sides of the Atlantic are looking to broadly end the week flat, but the big driver this week has been the inflation key theme, really. US CPI and PPI and the UK CPI all printing well ahead of the forecast and ahead of the central bank's targets as well. US Federal Reserve Chair Jerome Powell also reiterated that the US economic recovery still had some way to go before monetary policy could be tightened. So the market spent much of the week mulling over the Fed's dovish stance against high and rising inflation. And then just to add into the mix, concerns regarding the rapid spread of Delta COVID is also lingering over the markets as more lockdowns are imposed in parts of Asia. And the UK sees more changes to its green safe travel list. So whilst the DAX and the S&P are heading for mild weekly losses of 0.2%, the FTSE has underperformed its peers and is set for a 1.3% decline across the week. FTSE's been hit harder, really, with the majors as well as the oil stocks, and obviously oil prices have also come off steeply, hitting the sector as well. So all in all, very choppy, very aggressive, but now seems to be finding a bit of a floor. In the FX market, the US dollar is set for weekly gains, buoyed on by safe haven flows and rising inflation, promoting speculation that the Fed will raise rates sooner, even though the Fed was clear when they reiterated that the Fed would remain accommodative to the events. So in the pound against the dollar, pound is set to book mild losses versus a stronger US dollar. But the pound is up against the euro after encouraging jobs data and above target inflation. Some officials at the Bank of England have hinted that the time to start tightening policy could be approaching as CPI hits 2.5% and wage growth 7.3%. So we saw the euro against the dollar trading minus 0.45% lower across the week as part of the US dollar strength story. In the commodities markets, well, after an impressive run higher across the past few months, the rally in oil has stalled. Both oil benchmarks are set to lose over 4% this week as compromising OPEC paves the way for an increase in production to match the soaring demand. So rising COVID cases and more lockdowns in Asia also add to the downbeat tone on the oil market. Gold is set to end the week 0.8% higher, marking its fourth consecutive week of gains. So gold, also known as a hedge against inflation, has found support from surging inflation and supportive Fed commentary. With stocks, as I mentioned before, the oil majors have been swinging. Oil has slumped sharply, which has hit BP, the hardest, down 4.5% across the week, but not far behind it is Royal Dutch Shell, which is also down 4%. Banks have been in focus in the UK and in the US. Here in the UK, the Bank of England removed the pandemic-era restrictions on banks paying out dividends with immediate effect. Despite the good news, banks have fared poorly across the week, along with cyclicals in general. So we've seen Barclays decline 3.3%, Lloyds down 0.7%. In the US, banks kicked off earnings season, and so far it's been a mixed picture. Trading revenues have fallen, deal making has surged. Goldman Sachs and Morgan Stanley beat forecasts thanks to deal making, but the share price fell after they both raised doubts over the outlook. Meanwhile, Bank of America missed on revenue owing to the low interest rate environment and decline in trading activity, so their share price is down 3% on the week. Apple has rallied 2.3% this week. Its seventh straight week of gains as investors look ahead to earnings at the end of the month. All in all, a tricky week to navigate, but we're back on support on the FTSE and starting to see life. So thank you very much for watching. Please remember to subscribe, and any questions, don't hesitate to ask. Have a great weekend. Enjoy the sunshine.